when you're talking about raising capital, right? Like the first question is, how do you know you're ready to raise capital? And that's a question I had when I first started out. When I was doing the single family home investing, I wasn't even in the right mind space to go out and raise money because I didn't understand how it worked. I didn't have my systems in place. I had no business going out raising money at that point. And that's kind of, I alluded to the SPY formula, the shift, prime, and invest. That's part of the shift process. You really have to shift your thinking. And that's a process that took me, a while to go through because I was learning. I didn't have a system to follow. I was kind of making mistakes as I went. So as you shift your mindset, you really understand that Wall Street is the capital raising machine, right? Wall Street does one thing really, really well, and that is they raise a whole lot of money and they deploy it. So one of the things I did was I studied Wall Street and okay, well, what are the systems they're following? How are they actually attracting investors? How are they raising the money, and what are the structures they use to deploy it? And two of those structures really stand out. The first structure is called syndication. And the second structure is your fund structure, right? So we talked about this last week a little bit. I'll just give you a refresher in case you weren't on, right? So a syndication is used on a deal-by-deal basis for a single project, right? So a syndication, you'll have all your investors over here. These are the passive investors, people with not necessarily the experience, but they have money, but they want to, but they don't want to devote the time and the energy they need to basically start a real estate investing business from scratch. So they pull their funds right here. Then you have something called the general partnership, and these are the people who make the decisions in the project. So the LPs over here, the limited partnership, they invest their money over here, and the syndication then takes down a single project, right? So it could be an apartment building. You can syndicate, movies. You can syndicate basically everything. That's what Wall Street does. But we're applying this to real estate. So and any of the profits get split according to a split, and there's lots of different nuances on how you can structure things and customize it. So with the fund structure, the fund is very similar to a syndication where you have your limited partnership, the LPs, and then you have the fund manager, the GP over here. But instead of doing a single project, right? Instead of doing a deal-by-deal project, the fund actually has a life of its own, right? So it will acquire a property, it will sell a property. The fund can even do different rounds and raise more money and bring in more investors to add fuel to the fire, so then they can go out and acquire and divest of different real estate. So those are the two structures that Wall Street uses really, really well. And they do an excellent job. So the question is, well, how can you right now, whether it's you're doing your first deal or your second deal, how can you actually go out and find investors? And where do investors live? Like if you're starting out right now, where can you even find investors? Well, investors are basically everywhere. And generally speaking, you're going to be working with what's called accredited investors. And it doesn't matter if you're in Canada or the United States, accredited investors, they follow basically the same rules. And the reason accredited investors came about was if you go way, way back to the 20s and 30s, basically you have the snake oil salesman going from town to town. They would make these wild claims, take the Grandma Josephine's very last dollar, and they would never be heard from again. So basically they were swindling the population. So the government said, hold on a second. We need to make sure that if somebody's going to invest in a stock, right? If they're going to invest in an opportunity, they basically have to know what they're doing. And there were a whole lot of different rules that got put into place. And basically the securities the people offering the securities said, listen, hold on, like what you're having us do right now with all the legislation is really, really expensive. Give us an out here, like give us a way to do things. And that's where the government said, okay, well, if somebody actually meets an income threshold or a net asset threshold, they probably have access to a lawyer. They probably have access to an accountant. They probably have access to all of these different things. They can probably get wise counsel and make educated decisions. And that's where the exempt market came from. And if you are raising capital for a real estate deal, chances are you're going to raise it from the exempt market. So who is an accredited investor? Well, there's an income, and then there's a net worth. So with income, and obviously you want to check with your local with your country, but everybody's a little bit different. In the US, you have federal and then you have state level legislation, and in Canada, it's going to be provincial. So every province is roughly the same, but there are some minor nuances. So for income, you have to earn $200,000 a year or $300,000 as a couple, and then a net worth of $1 million, not including your primary residence. So you can't count your primary residence, but if you have insurance policies, if you have cash, if you have gold, silver, stocks, whatever it is, if you have your net worth of $1 million, not including your primary residence, then you can qualify as an accredited investor. And there's other ways you can do so as well, but for today's purposes, we'll stick with the two most basic ones. So it doesn't have to be both. You can choose to qualify through income, or you can choose to qualify through net worth, either one. So where do these people live, right? Where can you find accredited investors? Well, they're everywhere. You look in different sectors, right? Lots of accountants, they'll meet this. Lots of lawyers, they'll meet that. Doctors, healthcare professionals, people who work in tech, business owners. You just have to think in your brain, okay, well, where can I find people making this type of money? And they're they're at your local golf club. They're at your daughter's gymnastics lessons. They're everywhere. You just have to know where to find them. And chances are, you go to the dentist. You can have conversations there. You go see your doctor. That your doctor knows other doctors, and that's how you start building your network. And when we are raising capital, we have to follow. I'm a big fan of funnels. And we can thank Mr. Russell Brunson for making the concept of funnels very popular, right? So you have a funnel like this. And basically what you want to do is you want to load the top end of your funnel with prospects, and then you're going to work them through a process to eventually spit out an investor that likes you, trusts you, and is ready to rock and roll with with a check for your deal. So basically at the top, what you have to find is some sort of lead magnet. And depending on your niche in the specific type of real estate, your market, you could advertise, you could try and get investors from all over the country, all over North America. You could focus on a single specific area, maybe the town or the city you live in. You really have to figure out what works best for you. How can you touch the maximum number of investors? How can you maintain those relationships? How can you bring people into the top of your funnel? And through a lead magnet, this is exactly how you do it. So it could be a PDF report. It could be a case study. It could be a video series. It could actually be a live event where you bring in a couple high net worth experts. Maybe you have a family office planner come in and run a workshop for how to start your first family office and target people in a specific demographic. You could have an accounting professional come in who deals with high net worth families and run basically a workshop for them on maybe some accounting practices that they might not know about. All these different things are lead magnets. It doesn't have to be a physical thing. It doesn't have to be a digital thing. Anything you can think of that a prospective investor would be interested in. Now you can further niche down, right? Some people focus solely on medical professionals, on doctors, on physicians. So all of their marketing material, all of their lead magnets are focusing on healthcare workers. Their messaging is very healthcare focused. Their examples, they always use doctor examples. Everything is focused on that. So first of all, you have to figure out, well, who are you going to focus and where are they? Once you figure that out, you have your lead magnet. You have it set up, whether it's a physical event, in-person event, digital product, whatever it is. Now you're going to actually get people into your system, because for the lead magnet, you're going to ask them for contact information. So if they're showing up to your soiree where you have, let's say a family office expert come in and talk about how to set up your first family office, you're going to get their mailing address, because you're going to send them a thank you note and maybe a gift after. You're going to get their phone number, their email, all the basic contact information. Same thing for an online thing, right? Somebody downloads a lead magnet, just like spyformula.com. That's an example of a lead magnet. You're going to give your email address and your name in exchange for the lead magnet. It's an exchange of value. So once that happens, you're going to bring people into your CRM or whatever system. You can run an Excel page if you want to. You can get a really fancy CRM, whatever you choose to do. Now you have to basically figure out who these people are, and you're going to qualify them. Because what will happen is, and this is the whole concept of a funnel, if you have 1,000 people come in the top of your funnel, not everybody's going to make it down to each successive step, right? And this is exactly what Wall Street does. They do a lot of prospecting, and they have their own internal funnel system that moves people down. When you qualify the lead magnet, you're going to have a conversation. Hey, thanks for coming to my event. Hey, thanks for downloading my free PDF. Hey, thanks for downloading my case study. All these different things you're going to you're going to reach out, and then you're going to ask some qualifying questions. What are your investing goals? What experiences have you had before in this asset type, if any? What else have you invested in? What did you like? What didn't you like? Basically, what you want to do is you want to paint a picture of what this person, what they really need, what they're looking for, and how you can help them. Because not everybody who downloads your lead magnet will be a good prospect, right? You have lots of people who are just genuinely curious, but they don't meet your accredited investor definition. If you host a free event, you're going to get people who are just curious. So now it's kind of like you're sifting sand for gold. You're going to put your sifter down, your sieve in the river. You're going to shake it, and you basically want to end up with the really valuable stuff in there. Hey, thanks for watching. I've got 2 other great clips for you to watch right over here, and let me know what you think. Leave a comment, hit the like button. It really helps out the channel. And until next time, happy investing.